Hello and welcome. America's new president Donald Trump is threatening new tariffs against countries like Mexico, China, even India. He's wanting to send illegal immigrants back. There's a huge amount of geo-economic churn globally, and to talk about how India must navigate its economic journey from here, I'm delighted to be joined at the India Today Business Today studios at the World Economic Forum in Davos by one of the world's top economists, former Reserve Bank of India Governor, Professor at the University of Chicago, Raghuram Rajan. Thank you very much, sir, for joining us.
Thanks for having me.
Absolute pleasure to have you with us, especially at a time when there are so many headwinds that confront the Indian economy. So it's good to hear how you've been thinking about these. I want you to start by explaining to everyone watching at this time the real impact you think Donald Trump's tariff measures could have on the global economy and, most importantly, on India's growth.
Well, I think they are a big source of uncertainty and a potential source of disruption for the rest of the world. For the US, I don't think they'll be as beneficial as the administration thinks, partly because, goods are made outside the US for a reason. It's cheaper to make it outside. Trying to bring them back into the US by putting up tariffs, typically, if they could, they'd go somewhere else. What was being made in China will go to Vietnam. If you're going to put universal tariffs, maybe you stop them from coming in from elsewhere, but they have to be made in the US at a much higher cost because there's a reason China made it. I think the higher costs, the fact that the rest of the world is disrupted and their economies, which are already weaker than the US for the most part, weaken even further. And of course, the great uncertainty about where do you invest when tariffs could change overnight, not just from the US, because remember, there'll be retaliatory tariffs also. I think there's a big source of potential disruption in the world. I do think that the president has in mind three benefits. One, he believes it'll even the playing field. The US is running deficits because everyone else cheats. The second is that this could be a source of revenue. And the third is this could be a source of jobs. We could question each one of these, especially the source of revenue, because it's actually small in relative to the US economy's size. Maybe 200, 300 billion you'll get over time every year if you set them. But of course, firms will also make changes themselves. In terms of whether they'll create jobs, I mean, a lot of manufacturing is already automated, even in a country like India. Bring it back to the US, it gets even more automated. So I'm not sure this is going to create a lot of jobs, especially at the high school educated level, which is where there's a lot of anxiety. So
there is the question of competitiveness, which you say the United States doesn't have, which is why these jobs moved outside. But then there is also the aspect of economic coercion. Might is right. Donald Trump wills it, and we're already seeing how corporate America is trying to kiss the ring, as it were. And therefore, does that then impact India's opportunity to be the China plus one gateway, whereas a lot of companies think, hey, Donald Trump is calling us, cajoling us, coercing us, so it's better to set up manufacturing in the United States than to look at countries like India?
I think it creates uncertainty because, one of the things that President Trump respects is the market. Mm-hmm. If the market starts tanking on the basis of, some preliminary set of tariffs, then clearly there will be a revisit to the tariff proposition.
How are the markets likely to react in your view?
I think if you said, suddenly after the markets had been expecting no or moderate tariffs, 60% tariffs on China, 25% on the rest of the world, it would be seriously adverse for the markets. I think that is partly why the decision has been postponed some. Of course, we heard today it may come on February 1st for Canada and Mexico. Also, the other concern is there's a lot of other stuff wrapped up in these tariffs, right? Remember when the BRICS countries were talking about an alternative payment system, there was a threat of tariffs if you do that. The threat of tariffs if you have too many drugs being produced in your country and sent across. If you have immigrants. I mean, at some point the world is also going to get a little jaded. But of course, this is the most powerful country in the world. So you don't want to upset the president. You want to be on their right side. But how much can you do? So at some point, countries are also going to say the only thing they will listen to is the same kind of medicine. So you'll have tariffs imposed from the other side. Canada apparently has already prepared some. This is not going to end well if it continues along this path.
What kind of inflation pressures could it create on consumers in the United States and the spiral effect on consumers in India if these new tariffs are actually imposed?
Well, I think from the Indian perspective, it would be more limited because we don't import that much from the United States. And even if we impose tariffs on the US, that's not going to be a huge problem. I think the concern for India will be more if Chinese goods get stopped at the US border, will they try and find a home elsewhere? And similarly for Mexican goods and so on. I think on the US itself, tariffs will increase the price in the market. Some of it will be absorbed by the producer, but some of it will be passed on. If it is a one-time thing, I think the Fed will look through it because it's a one-time increase in prices. But if it's steady, if it creates more inefficiencies, that creates more inflation. If workers, because they're protected from competition from the rest of the world, those could be sources of more steady, higher inflation. So yes, it's inflationary, but maybe one-off, and the Fed will look through it. But there could be a more sort of steady ramp up in inflation, in which case the Fed has to be even more sort of stay with higher interest rates for longer.
There's a big debate in India at this moment about whether the dip that we've seen in economic growth in the second quarter of this fiscal, is it a short-term phenomena caused by the elections, caused by the pullback in capex because of the general elections, or is this more cyclical? Where do you come out on this deeply contentious debate? Short-term with an immediate recovery, or more cyclical and structural?
Well, one quarter, it's very hard to be assured that you have the right answer. But for some time, I have worried about the strength of consumption, which has been less than normal over the last year and a half, 2 years. What has instead compensated is infrastructure spending, which undoubtedly the government has done a lot of, which has been very successful in elevating growth rates. But of course, what was missing last quarter? It was infrastructure spending. And so you could see that, when that's taken off, the economy is weaker than we thought it was. The other component that's important to focus on is earlier the weakness was in the lower middle class consumption and the consumption of the poor. Now you're seeing upper middle class consumption slow down somewhat. So my sense is, broadly speaking, what is the reason for consumption slowing, especially when the stock market till recently was quite buoyant? It has to be concerns about economic future, which means things like jobs. Do we have reasonable jobs? Are our children getting well employed? Do we feel confident enough about the future to spend? And you can see a lot of spending was being supported by borrowing, the unsecured borrowing that the RBI cracked down on. So these are all signs that at the edges, all is not well. Now, that doesn't mean we plummet in terms of growth. I still think our baseline is about 6. But 6 is not enough because we're not creating the jobs for those young people coming in.
India's growth numbers demonstrate the dependence on government capital expenditure. We've been waiting for private investment to kickstart. Capacity utilization has been in the mid-70s, which is typically when you see a fresh investment cycle kickstart. It hasn't happened fully so far, even though the likes of Neelkant Mishra and others say they can see some green shoots. What's your reading? Will we see a full-fledged investment cycle? Why is it being delayed? When does it start?
It's been delayed for a long time, right? I mean, when I was governor 8 years ago, I used to worry about why isn't investment coming back on. And there too, we were flirting with the 70, 75. We said, when it hits 75, it's going to come in. Didn't quite come in. That's, I think, the big puzzle. Why is private industry not investing? Partly, partly the answer is positive. It's because they've become more productive, they're using their capital better, etc. but partly the answer is negative, that they're not sure of strong demand going forward and not preparing in time. Because you would think if they see demand down the line, they should be preparing well in advance. And they don't seem to be. So it is a big source of worry. It would be nice if that came on board. Maybe part of the worry is with Indian exports also, that with the tariff situation. But of course, the tariff situation is more post-US election. But I do think this is a really big concern and a puzzle. I don't have a quick answer to why they're not doing it.
The fact that it's a puzzle is something for me to say. You're supposed to have the answers. If
I
you
don't
were, say, in Finance Ministry or RBI dealing with this situation where capacity utilization has been in the mid-70s, despite the reduction in corporate taxes, private investment hasn't really kick-started in a big way except for some green shoots in some sectors. What are your policy recommendations? How can we change that?
So, as you know, investment is a lot about animal spirits. It's about the sense of ebullience, the confidence that private industry has about the future, and also involves a certain amount of risk-taking. I don't quite know if demand will be there, but let me invest. And in fact, what happens is you get a virtuous circle. Because they invest, because they create jobs, there's a sense of confidence that permeates the economy and they invest. I would say early 2000s, in the previous NDA government, you saw that confidence building up. When you talk to private industry, it was, we can beat the world. I don't sense the same kind of confidence anymore. It's no longer we can beat the world, but we need protection against all those guys who have, they have supports from the government, etc. We're talking again of industrial policy. We've talked about the PLI scheme before, but we need crutches. And that wasn't the case in the early 2000s. So it seems to me that part of the answer is private industry itself hasn't got that confidence to go out and invest, which it needs. Now, I don't know if it's tax cuts. We've, as you said, already cut the tax rate on private corporations quite a bit. I don't know if it's investment incentives, but it has to be more a sense that we can be world beaters. And that's disappeared for some reason.
Is there any way that can be changed? Because a lot of it is just spirits, right? You said animal spirits. Can any policy or nudge impact that?
No. I think you can talk a good game as a politician and say we're going to grow, but I mean these are hard-bitten business people, and unless they see the underpinnings, or they have this animal spirits from somewhere, it's going to be very hard to get them to put their money in the ground. So I think the government was doing what it could on the physical capital side, that is infrastructure spending. I wonder, and I've been saying this again and again, whether we can do more on the human capital side. That is, take, the fact that right now I was meeting a NGO here. He was saying we've got all these bright kids, really poor kids. We identified them. They're really smart, but they can't get into the IITs. They can't get into the tech colleges. So we have a thin layer of very good schools, very good universities. Can we expand that? Because that's where we're getting our longer term sort of the people who are going to these GCCs, the people who are going to top, who are creating new jobs. So maybe it's to shift the focus of government spending. We talked about skilling in the last budget. I'd love to see how we're doing there, but we need to do far more.